The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we saw some decent action in the grain trade led by wheat on Tuesday. A mixed bag, mostly green though in livestock. Energy's rebounding. I'll say sort of a turnaround Tuesday in these markets. We're going to talk about it and get some perspective today with Tyler Schau from agmarket.net joining us here on Market Talk. And Tyler, it's good to catch up with you again. Thanks for joining us today.
You bet. Good to be here, Jesse.
Well, I'm not going to say it was a full-blown turnaround Tuesday in the grains, but compared to what we saw Monday, fairly decent day overall with, like I mentioned, wheat kind of leading the way. I didn't see anything massive in the news to really move these markets. It just felt like money kind of flowed back into commodities to some degree on the day.
Yeah, there has been a few rumors of China sniffing around for some soft red wheat for the last few days. Haven't seen any type of sales or confirmation. Who knows? That could be rumors. There is talk too. They got some awfully cold weather moving into the Midwest. It's going to be sub-zero and places where it's normally not sub-zero, and in some of those places is your winter wheat country. And so, there's maybe some concern about some winter kill, coming into the weekend and early next week that might have stoked a little bit of that move higher in the winter wheat markets. The one bright spot, and I know sometimes this is hard for people to really grasp on or buy into, but we have kind of come down and tested 452 in that March contract. We went to 451 and 3/4 today. We went to 452 yesterday. The December contract, I think, had a low of like 447, something like that, right before it went into delivery. So, it feels like maybe there's some buying coming in at that level that's supporting this market. So buyers are finding value there. And it might set us up if we can get any type of either maybe a bullish surprise on the WASDE report, or if nothing else, neutral to not bearish. That could be a catalyst that this market has bottomed for the near term, and we find a little bit of activity that pushes prices higher over the next couple months.
I like how you framed that up, and I'm glad you brought that up here because obviously these big reports in front of us on Friday, they're always market movers. They always have surprises. But to your point, if maybe we got some bottoming action happening here in corn and maybe even at soybeans too, I'm sure we can dissect this a little bit more. But I think this market, I would agree with you. It would be nice to see this heading into a very big report day that kind of always traditionally lays the groundwork for much of the early part of the year every year, Tyler.
Yeah, the January report is known to throw some curveballs. For really all year ag market, we've been talking about the potential of a 2 billion bushel carryout on corn. At the end of this marketing year, come August or the end of August of 2024. And really within the last few months, the rest of the market's kind of, decided, hey, we're going to have a 2 billion plus carry out. I think on one of the last WASI, it was 2.1, 2.2. But our estimates actually, we're looking for a possibility of this thing coming right at 2, possibly just sub 2 billion bushels, which, don't get me wrong, still a lot of corn, still a lot of stocks, still a lot of carryover. But that could just be the bullish surprise. And our reasoning is ethanol grind has been robust, been turning a lot of corn into ethanol. You've had the cattle on feed reports that have surprised a lot of people with the number of cattle on feed the last couple months. So it feels like maybe there's going to be some disappearance of corn that it's going to have to get verified or justified in these reports. And so I wouldn't be surprised if there isn't just a slightly bullish surprise there. Like I said, this market's been betting on the bear side. You've got the managed money crowd short a lot of grain, really a lot of agricultural commodities now. They're not typically that short. And so, there's a setup there for some type of a catalyst to just give us a little pop. Now, bear in mind, we're still bearish grain prices moving throughout the year of 2024. But we could see a little bit of a reprieve here of these lower prices for a little bit, maybe get us an opportunity to get some old crop priced, and then probably more importantly, get working on getting some hedges on new crop.
Yeah, good thoughts. Good thoughts. One thing that I just thought of as you were talking there, you brought up ethanol grind, and I had a question on X the other day about ethanol margins. Your thoughts on just how ethanol margins are looking? Do you anticipate much in the way of any changes there that could impact this corn market one way or another here in the weeks and months ahead, Tyler?
So, ethanol margins have gotten a lot tighter. They were awfully good throughout the summer, most of this fall. Ethanol, and it didn't really surprise us that they've stayed. They've been hammered down, turning corn into ethanol. Production has been high. Stocks, though, we've been using it, and we're starting to finally build those stocks up.
Hmm.
But that's not uncommon. That's normal. That's kind of the cycle. We build up stocks in the wintertime, so there's plenty for driving season when it hits in the summertime. I think that's the positive news there, and we've needed it because the corn exports have, they haven't been bad, but we're not predicting massive corn exports, and we've just got a lot of competition throughout the world. So I just, yeah, that the margins are getting tighter, but I don't think they're going to slow down. Right? There's been a few stories of a few plants slowing down, but there's going to be a natural slowdown here probably this week as a lot of the Corn Belt deals with some massive storms coming through. So I'm guessing we'll see a little bit of a reprieve, but I think the margins stay decent enough that they're going to keep turning corn into ethanol, and that's going to help support this market moving forward.
Tyler, on the soybean side, we know futures have come down quite a bit here in the last month and change. China's largely disappeared from the U.S. export market here as of late. I feel like that soybean export window is probably closing up. And then, too, a lot of eyes on South America as we've seen some of the private estimates lower the production number in Brazil. And we're going to get some updates to that here this week. Your thoughts in soybeans, though, is it maybe the same story as corn, or you seeing some bottoming action potentially here in soybeans right now, or is it a different story?
Now, kind of feeling the same thing. Like maybe there's a little bottoming action in soybeans. Two thoughts come to mind. One is in 2013, 14, after the WASDE report came out, the soybeans actually rallied, or the January WASDE report, soybeans actually rallied about $1.60 off of that report for about 2 or 3 months. So, not saying that history's got to repeat itself, but we were kind of in the same setup. Market felt a lot the same way. It felt really heavy coming into that January report, and we saw some follow through buying, lasted into March and April. Corn actually saw like a 60-cent rally off of that January report. In 15, 16, I think that was, or 16 was the drought in Brazil, and it took till March and April for the market to really fully digest the damage that had been done in Brazil then as well.
Hmm.
I'm not saying that that's the case. I mean, maybe I would, after you take a look at the production cycle this last year in the U.S., you can make the case that definitely genetics are better today than they were 6, 7 years ago. I'm sure that's no different in Brazil, but don't forget the fact it's a very large country, and it's going to take some time to figure out what the damage done there was. And at the end of the day, we still have historically tight balance sheet on soybeans domestically, anyhow. So I think there's support there for now. Now, same as with corn, if we hit March and April and we get some opportunity to look at $13 new crop soybeans again, and you don't take advantage, then that's the fool me once, shame on you; fool me twice, shame on me kind of thought process.
Yeah, good thought there. You brought up too, maybe locking in some hedges on new crop. Are you getting aggressive here, quarter beans, new crop ahead of the January report to protect any downside risk, or are you waiting until after the report to see what we end up with here?
We, ag market, our official hedge recommendations has been to be about 70% hedged on new crop corn. We're about 30 to 50% hedged on new crop soybeans. That's not always just straight sales. It's a combination of a lot of stuff. We use a lot of the short dated option strategies out there. But
Hmm.
for the producers that have been following us, we're fairly hedged up new crop. And actually, one of the things we're looking at ahead of this report is how do we defend some of that? Maybe if we've got some sold grain, maybe we're buying some calls using short dated calls. We've looked at how do we defend some of those puts so we're not sitting on premium that expires. And then in some cases, we've taken gain on straight hedges and replaced them with some put options. If you're behind the 8 ball and you haven't done nothing, we're still sitting here at 492 and 3/4. Take a look at some March short dated option strategies that gets you to the end of February, that kind of gets you through that crop insurance pricing period. And they're not really that expensive. You can probably get something done for a dime or less, pretty close to the money. Or take a look at going out to May and getting past the March 30th planting intentions report. But probably some of the best advice that I've read here recently. Brian Splitt wrote a blog for an outfit, and he just said bear markets punish indecision. And you've seen that happen. A lot of guys have, they've thought about buying puts and, well, I'll just wait and see. And, they wait and see 6, 7 days. Well, 6, 7 days, taking a nickel off this thing, and all of a sudden we're 30 cents lower. And you start to feel that pain. So, I'm not saying 10 cents is nothing, but, you might not want to sit and think about that too long. Spend a little bit of money, get some floor protection on. And if we're out that premium, that means the market went up, and that's a good problem to have.
Tyler Shaw with agmarket.net joining us for a conversation here today on Market Talk. Tyler, let's go over to livestock. Cattle's been kind of mixed here early this week. We've started our sessions to the upside and then kind of given some of that back as we've gone through both sessions Monday and Tuesday. Your thoughts right now in cattle? Are we running into some overhead resistance here? Is it just a case of some of these funds not wanting to step back into this cattle market? What's your take on what we're seeing in cattle right now?
Yes and yes. So there's pretty much take your pick on any of the charts, and there's some technical resistance up above. We've also got some really good moving averages right below that have been holding support. So this market, several days in the feeder calf market, especially, we've seen $4 ranges high to low, but the close has been within 50 cents of the day prior, right? So we've seen some big daily ranges, but closes that really don't seem to feels like the market hasn't moved at all. Um, I have a couple thoughts there. You mentioned funds not wanting to buy into it. You're right. They went and dumped their positions, and in some cases they've in the feeder calf market they've got a little bit short feeders. They've really lightened up on their length in the fat cattle market. And it's one of those things where it's going to take a catalyst that gets them to draw that money back into those markets. And that's going to have to, my opinion is, it's going to have to come on the heels of cattle on feed reports, where all of a sudden the placements aren't there, the cattle aren't there, and packers are really scrambling to get their kill. And until we run into a news story like that, or a market where that's occurring, I don't see the funds rushing to get back into that cattle after that collapse that we saw from September to December. That being said, the support has held, and as long as it's holding, we feel pretty decent about it. One of the interesting things about like these big daily ranges and up $3, and then 20-30 minutes later down $1, option volatility has ballooned again, so puts have gotten quite a bit more expensive. Same with LRP, if you use LRP to hedge livestock. So it be astute to pick some targets. We hit those targets, put the protection on, and if we learn nothing from the last 3 months, sitting and waiting is not always the best move in these cattle markets.
Do you think this week's winter weather and the snow and some of the blizzard conditions, and then this upcoming polar vortex shot, could have an impact in feedlot country and maybe translate into an impact into these cattle markets possibly?
Well, it should, and that's why I've been surprised where we see these moves. come in early and we're up a couple bucks, and it feels kind of like maybe that news is filtering into the market, and then it just kind of fades throughout the
Yeah.
day. So I mean, maybe we'll finally get some buying. It could be the cattle market's waiting to see what this WASDE report says too, and then after we get all these reports out of the way on Friday, then the market starts to take some direction. But that is, as long as we've just kind of paused in here, both fats and feeders. That I like having some protection on just because it makes me nervous. But I could also, I don't know that I'd want to be straight short the board here because this thing feels like it's going to pop. I just don't know what direction.
Hog market, what is it? 3-4 days in a row. We've seen some green
Yeah.
in futures. Been a little bit of spreading, it looked like, between the front months and the back months. But, and Tyler, it's kind of a positive couple of sessions here for this hog market.
Yeah. Hogs trade very technically. And they've been in a very well-defined downward trending channel really since mid spring last year, like March and April. And like clockwork went right down to the lower level of that channel late last week and found some support, and the buyers have just been coming in. I think you're right. There's some bull spreading going on. They're buying the Feb, selling some of the back months. Um, you know, Resistance, we're trading $72 hogs, just shy of $72 hogs in February. Resistance probably going to come in right above here, 72, 73, and then the upper level of that channel is going to come in at about 77, 78. So in here, if you're a producer, here's a good spot to lay into some protection, some hedges, some options, something to that effect. And then if you're speculating, kind of the same deal. It's probably time to maybe look at how do we take advantage if this thing does fall back to the lower level of that channel.
Tyler, good stuff. Before we let you go today, anything final you'd want to tell folks as they're kind of watching the markets this week, gearing up for all this big data dump here at the end of the week? What would you tell folks to remember?
The big one, there's probably going to be some volatility. Uh, you know, One of the things I don't want to sound negative here, but one of my pet peeves are things that always kind of I don't want to say bothers me, but I guess I'll just go ahead and say it, is when customers call and say, what's this WASDE report going to say? And I always typically say, if I knew, I'd work for the USDA, and if I did that, what I'm doing now would be illegal. We don't know what it's going to say. Define where your risk lies. If you're a producer, that's probably to the downside, and figure out a way to manage it that fits your parameters. And then, if you need to make sales, if you're behind, put some orders in to get some sales made on any type of a rally off of that report. And I mean, don't forget the world we're in today, the computers can trade it so much faster than I can download it and read it. By the time I get it downloaded, read it, digested, the computers have probably traded it several hundred times. And they're just trained to go in and look for certain numbers and execute the trade based on that. And as that computer reads through the whole document, it might change its mind multiple times, which is why we'll see these markets immediately shoot up 30, 40 cents. And within 2 or 3 minutes, maybe we're down 20 cents. So there's a lot of volatility in there. Don't wait until Thursday or Friday morning to buy options because they're going to increase in volatility and get more expensive. Spend tomorrow, get your plan made, and get the orders in and execute them.
It's a great way to wrap up the show. And Tyler, I know if folks have questions, they can reach out to you and the team there at agmarket.net by going online, take a look at your research, and also sign up for your conference in Nashville coming up here in a few weeks that I know I'm looking forward to being at, and a lot of folks are looking forward to being at that as well.
Yeah, well, I live in North Dakota, so I'm looking forward to get to Nashville too. Hopefully it's warmer than 1 degree by then.
Well, we definitely hope so. Again, find details at agmarket.net. Tyler Shao, always appreciate a conversation. Have a great week. We'll talk to you again soon.
You bet. Take care, Jesse.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.